disclosure. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you or your own financial condition. It took me a minute to really figure out this whole position disclosure because it's so different and unusual compared to where it's been. It's like on the one hand, I'm back in Chevron. On the other hand, I've got some weird names that I'm usually not liking to belong, like Coinbase, Ethereum, Bitcoin. Then I'm buying up some software like CRM and Spotify and Snowflake. And then I'm shorting some like consumer staples while also somehow hanging on to a SanDisk short. I almost never trade consumer staples, so it was a really, really interesting trading session. We're waiting on AMD here, so I'm going to keep an eye on that out of the corner of my eye. But yeah, it just seems like it's a market just with massive dispersion. And before we kind of jump into things, because we're waiting for AMD, it was interesting to hear Pat say kind of what I was thinking and doing, which is like having a shopping list, like, you know, certain companies that you think are really good companies, but they're down so much, and that's what you're waiting for. And at a certain point, you kind of bring out the shopping list of companies that you're interested in, but you never really wanted to buy. The interesting thing that's about that is that's usually a conversation that we're having in a bear market. AMD out, it's up. Initial tick here is up, back down. Operating margins beat, adjusted EPS beats, operating income beats, capex is light, adjusted EPS beats, revenue beats, everything beats. The numbers look good to me. Reaction is not good. Numbers look good. Reaction is not good, at least initially here. Starting to trade down now. AMD, here we go, guidance. NVIDIA coming down. AMD sees first quarter revenue. It's ahead of expectations. 9.5 billion to 10.1 billion. Qs are coming down slightly here. On the downside, 222 to 223 area is the expected move. We're nowhere near that. So the numbers are too good, I would think, to do the expected move to the downside, but maybe it's just not good enough to be up. So it's an interesting one that we will be sure to monitor here. Okay. All right. So we'll keep an eye on this, which is trading lower, and we will do our meeting here at the same time. That's kind of what I was waiting for. So yeah, I mean, just jumping into just how extreme the dispersion felt today. We're talking about a shopping list. Those conversations. Some of you guys have probably never heard that conversation here in the VTF, because when's the last time we had a real bear market? I guess we had one, brief one, with the tariff tantrum back in April. But the old bringing out the old shopping list kind of game plan is definitely an interesting one. But we're kind of talking about some software names, I think, pretty specifically. Hold on, I just got to fill in something else now. Okay. Market's trading a little bit down. I just got filled on a bit on some Qs, because I'm short the Qs. I'm trying to figure out why my P&L just got so much better. Obviously, it's typically a good thing, but it makes me think I'm missing something. NVIDIA trading down. AMD continuing to get hit. Anyone see anything on INHD for me? No, it's a weird one. Could just be a weird mean thing. Oh, I just got too much going on right now. Thank you. Of course, I get a partial fill to make my life even more complicated. Sure, just give me a second here. There we go. I got filled on the other side of my partial fill. So I've been really underwater in this thing since I got stuck in it, and I just decided that my out on it was 0. So I've been trading it versus 0, but this is a 24% after hours pop here. And of course, I got another partial fill. There we go. I have so much to talk about for today, too. Is it supposed to be a 1,000 share offer or a 2,000 share offer? I don't remember. I gotta find my spreadsheet. Another partial fill. 984 shares. Thanks, guys. Form 10Q. Yeah, it sure is, Bill. That was a good one. That was a good one. Hold on. I gotta look up something on my game plan on this thing because it was not expecting this pop. I don't even remember what my game plan is. So confused. 192. I guess that's it. Yeah, there we go. Figure out starting at 192. All right. Oh my gosh. Where's my brain? We got the market trading lower here. Now this thing's gonna come crashing back down. My apologies, guys. I'm just wasting everybody's time right now. Where are the Qs? Okay, I'm good on the Qs, right? Where am I? I don't know if I have a bid down there or not. Do I have a bid down there? I do. Okay. Oh, let's give me another partial fill just to waste everybody's time. All right. Let me try to do this meeting. SPYs right now are down after hours. We got smoked today, 0.9%. Qs, including the after hours, are down 1.7%. IWM is positive 0.3%. The RSP is like flat negative, down 0.13%. So, you can really just see like Qs down 1.7%, IWM positive. And that kind of shows you, I think, in a lot of ways, everything that you really need to know about today's trading session. There was just massive dispersion that was ongoing, and the market took a bath. The market today did what I wanted it to do yesterday, and I was very surprised that it got blown up yesterday. But given that it got blown up yesterday, I was very surprised about how weak it was today. I didn't see anything new that justifies, and I know that that's not necessarily how markets work, that justifies the market selling down today. I could have given you plenty of reasons why the market should have or could have sold down yesterday, but they didn't matter because the market got bought back up and we closed with the S&P looking super bullish. And then today, we sold all the way back down, and now we're kind of retesting these important levels. This SPY, 685, the low from Thursday, is really important right now. And guess what today's low was? It was just a little bit below. It is 684, but we closed above. So we traded below, yet closed above the first key level for the SPYs. We also know, per the Goldman Sachs note, that the first CTA sell trigger there, their short-term sell trigger, is basically sitting right around Thursday's low also. The bigger one, though, the really big level, I still think is the January low that we really need to pay attention to. That coincides with the Bank of America CTA sell trigger, and it's a little bit closer to where the Goldman Sachs medium trigger is. And then also, per the Bank of America note, Gamma would be flipping negative at those prices. So that's really what I want to pay attention to. But now you look at the Qs, there's a lot of damage in the Qs today. The Qs solidly closed below Thursday's low. So the Qs just went from looking, pretty bullish again after yesterday to back to being like bearish, or I guess neutral bearish. Neutral bearish until we break January's low. We break January's low, same thing. Things could really begin to accelerate and we'll start to look significantly more bearish. Yet the IWM continues to look fine. It was green today. The RSP is like making a bullish consolidation here in front of all-time highs. The incredible thing about today's trading session, which I started to talk about a minute ago, was the dispersion. The software stocks, which I've been primarily staying away from, I kind of get the idea behind AI eating software's lunch, so I've been, primarily avoiding it. But some of these software stocks now are starting to hit extreme extension. This market is very unusual, and I think that a lot of this has to do with a combination of options, which guess what? Now we're seeing even more options expirations for individual stocks, so it's going to have probably an even greater impact just on how things trade, and also the levered ETFs. We spent a decent amount of time talking about just the other day how the levered ETFs in silver, this AGQ in particular, really impacted that silver sell-off at a certain point on that day and actually eventually led to a good buying opportunity. I think that some of this is also the culprit just between how extreme the dispersion is becoming. Look at this IVG. I'm not even going to count prior to the gap. Technically, that would be 2 down days in a row up there. After this large gap, we've got 4 heavy days of selling today, with today being the biggest one, with the volume really, really beginning to increase here. This looks like this is the biggest volume ever for IGV as an ETF. It is. This is almost, just from a pure charting perspective, beginning to look like silver in inverse, right? In reverse, where that sell-off is just starting to become extreme downside extension here. So the IVG is getting really interesting. And look at some of these names. Look at Salesforce today with this gap and go to the downside and just this utter destruction that's coming in here. Look at Intuit. Look at Intuit's gap and go after gap down 3 weekdays, gap down for continuation. What else was I starting to bottom pick a little bit today? Spotify is a little bit different. But also, broke support. This one is technically a day one. I'm pretty small on it, but I called out this long here at 140 for people to get long versus, which, happened to be the bottom. Coinbase, different because it's more crypto related. This is now like day 5 to the downside. This thing is getting absolutely annihilated. Robinhood, which I didn't trade today, but I traded yesterday. This thing's getting absolutely annihilated. Snowflake, which I'm in, massive day 4 to the downside. Volume is really beginning to pick up, so that's another one that I've nibbled a little bit to the long. So I was actually a little bit more aggressive in this one than I was for some of the others. So software here getting destroyed, And then popped up on my radar was that this XLP, which is usually something that I avoid, giving this massive day 3 to the upside. So I started talking at a certain point today, just with the extreme extension in XLP to the upside, which is a defensive trade, obviously, and software to the downside, of like a mean reversion pair trade of short consumer staples versus being long software. So, that's honestly, and it's a weird pair, obviously, but these are like, of the dispersion, it seems like these are the sectors that are at their most extremes right now. It's staples to the upside, huge day 3 up here, and software to the downside, which is getting destroyed. The thing about software, and we didn't even get into some of the cybersecurity stocks, like CrowdStrike got destroyed today. Sentinel-1 is basically back down to all-time lows. I've been out of this S for months now. This is a name that I used to trade really, really actively, but I got out of this in 2024. I think, was it 24? Have I been out of this for that long? No, I don't remember. I think I got out of this at 28 back in 2024, and I haven't been involved in it since. And now it's all the way back down here at 13. So I started to ask myself, one where I was looking at like that pairs trade of consumer staples short, and I even traded some consumer staples today. They're just so boring and slow versus semis versus software long. But I was also starting to think about and ask about to people who I trust, who are really good at fundamentals in various places, like, at a certain point with the way that software is selling here, and look, again, I get it, AI is eating the world and it's having a big negative impact on software, but this IGV ETF at this point has gone from 118 down to 85. That's not a levered ETF, right? That's just showing you how brutal the bear market is in software. And now that I'm really beginning to see this accelerate, then yeah, I'm looking to bring out my shopping list. I'm asking myself what good companies are out there if they're throwing the baby out with the bathwater, however that expression came up. I don't even know what that means. There's got to be some good companies out there that could be buyout candidates. And I think we saw in the VTF today, someone said that like Thoma Bravo is going to, get out their shopping list, and they might look to start buying some of them. And I kind of agree with that. So I took a really big position in this S here into 13 because I think that there's value there. Maybe this is one that could potentially get bought at a certain point, and I'm willing to trade it at these prices and have a much bigger picture play on it as well. And the other one that I've been in for a little while, which is a similar thought process. I was pretty light when this thing was in the mid 70s, but I've now sized up significantly at 60. Is this ESTC. So I'm really watching both of those. But again, buying the dip in Snow, buying the dip in CRM, buying Spotify a little bit, buying INTU, buying IGV. A lot of these positions are on the smaller side, but we're starting to get into some pretty extreme downside here for some of these names. So that was a pretty big focus. At the same time, crypto, which I'm not a believer in, is also really hitting the point of just getting, is this continuing higher here after hours? Not really. Hitting the point of getting absolutely pummeled. So I communicated some longs in the crypto trade today, intraday. I think we kind of nailed this low in IBIT also, if I remember correctly. So that helped. That was a pretty good call, if I may say so myself, for IBIT and Ethereum. What I did not nail, and I tried a couple of times to communicate ideas in this space, but it did not work out, was just at the index itself. I think I had a bunch of really good call outs, but I was also on a couple of occasions on the way down trying to bottom pick for bigger bounce backs in the Qs, and I think I called out like 3 trades that failed. Some of them, like this one, probably gave enough room to give you a little bit of a bounce back. But I think I called out a long off this one here at 135 also, which was just a complete and utter straight failure. So all over the place with these stocks. And at the same time, semiconductors minus SanDisk, enduring a little bit more damage. And I actually mentioned the semiconductors in the morning meeting today because the move higher in this SMH, I was saying if this thing is not going to immediately make new highs, then it probably will hold into this like 412 area. So I was shorting that, pre-market at the same time, which worked out okay. So and then the other one that was just really hard was Microsoft. Microsoft now 3 huge days to the downside, starting to really accelerate here. I was really trying to find some lows in Microsoft, and it was never that I was wrong, I don't think, on really any of my Microsoft longs or calls that I kind of had on this. It was just that I never really got any follow through. We had like this nice little bounce here and then created this consolidation that it could have broken out from, and it failed to do so, and then made new lows, and then was holding in well into the end of the day, but never was able to kind of truly break up. So Microsoft, I actually said in the morning meeting, I'm long because I have a game plan long, and I am, was actually holding a little bit into the earnings report, a very small position. So I've been long ever since then, and kind of adding on the way down and managing the position. But what I said in the morning meeting today was Microsoft looks broken, and I don't think it's ready yet for a big enough of a move where the extension is there where you can come in on the other side. But that's what I was saying at 424. At 410, I think you get a little bit of a different picture because now it's 3 massive days to the downside in a row. It could definitely give one more also, but it's starting to hit that really extreme downside extension where I'm looking for a long in this as well. And it's interesting because Microsoft has traded a lot with the software kind of companies, I think, in parts of this overall down move for software, even though it's obviously involved in not just software, it's involved in everything. So, yeah, that's really all that I have got for you guys for the moment. So I'm happy to answer any questions anybody has. What is this the top holdings of, Liam? IGV. Oh, interesting. Ha. I was wondering at a certain point what the top holdings of IGV were because I was trading just the extension and didn't actually know what the holdings were. It's just interesting to see that Microsoft and Palantir are the top 2 holdings of the IGV. Oracle's number 4, Salesforce is number 3. I almost bought a little bit of Oracle today at a certain point too, and I didn't do it. ServiceNow is in there. ServiceNow is another one just getting absolutely decimated. Thanks, Ryan. I saw that you had posted something earlier, and I didn't have the opportunity to read it yet. Definitely take a look at that after the meeting. So that is all that I have got for you guys. Shopify? I haven't look at Shopify. Ooh, Shopify might be getting interesting soon too. I was always consistently long Shopify in the 40s and 50s. So it's like, now it's at 118, but it just pulled back from 180. It's another slaughter here with the Shopify. That's another one, certain point, I might want to buy the dip in. It's just my concern as I'm buying my shopping list and some of the software stuff is the market. What's going to happen if the market really starts to sell with these things? That's the question that I don't have the answer to, and that's my biggest concern on getting too heavy too fast in anything. I forgot to put bids out in this SanDisk. I need to do that. My concern on getting too big too fast on anything right now is the market itself, because like I was talking about in kind of yesterday's afternoon meeting, from market dynamic perspective, I don't like the market, but I'm waiting for the technical signal, and today may have been the beginning of the technical signal. For the Qs it is, but the SPYs aren't confirming it. So there's definitely some reason to be cautious on getting too big too fast on any of those plays, and that reason to be cautious is the market itself, because You might think that IGV looks extended now. Just wait until you get a very fast 12% correction in the market. That's all I got. Happy to turn it over to you guys for questions. Sorry, my wife just texted me. Yeah, I'm expecting the bearish rumor note too. I'm excited for it. Not just expecting it, I'm excited for it. So from Ethan, why is software so weak as the strength of potential AI increases? So I haven't done a deep dive in terms of research on this, but I've just seen enough come across my screens to kind of see that for whatever reason, the initial thought process is that AI would make software companies more powerful and therefore make them even better. What that has begun to turn into is AI is replacing software, and you just don't need software in the same way that you needed it previously because you can be using an AI solution from OpenAI instead. And that seems to be what is just wrecking this sector as a whole. That's my general understanding of things without having done a really deep dive yet at this point. But it's also, I think that if they're just selling anything that's software, I think that actually creates a lot of opportunities for stock pickers that are willing to do some research and say, like, sure, that maybe, I don't know, Salesforce isn't going to be as needed because you can get an AI solution that's better, but a cybersecurity company maybe is going to be needed because you're still going to need cybersecurity in those situations. So for people that are better at fundamentals than me who can do deep dives and having a good understanding of the specifics of what's going on with AI versus software, I think that there is opportunities to be able to figure that out. What I've always been good at as a trader, honestly, is having other people do that work for me who I trust, to be totally honest. Like, I've got a few people that are really good, I think, on the fundamental side of things, much better than I am. And, I can have conversations with them and they can tell me, like, hey, I think that, this one is actually an opportunity in this pullback because they're just selling everything and this stock doesn't belong at this price, basically. And then I can look at it from a trading perspective and say, like, okay, that's great background information. How can I buy the dip? How do I want to trade it? How do I want to position myself around that? I hope that helps, Ethan. Appreciate the question. Ryan giving some good information that I'll read after the meeting. IWM bounce back was fast from Vikas. I had to short but didn't cover soon enough. Thoughts on getting these rebounds? Yeah, I mean, so the IWM's V bottom is really impressive compared to the Q's. The Q's is kind of just like a little bit of an oversold bounce. It's not that impressive at all. I think that the big thing to just recognize is where the relative strength was. The relative strength was in the IWM. It was in the RSP. How well that was all holding in today, and it was not in the Q's. So it means that if you're short something that's IWM related, you want to be booking profit a little bit more quickly. If you want to be going long, you want to probably be more greedy in something that you're buying that's in the IWM versus something that you're buying in the Q's, just because of that relative strength aspect. TTWO. Grand Theft Auto 6 marketing's about to start. Sure it is. Sure it is. Now let me turn over to the YouTube here. From Giancarlo, I cut off winners way too soon in fear of giving money back. Then I give losers too much room and sell for a decent loss outweighing my small gains. Any suggestion on or help on this? Sure. So, what you're describing, the concept of selling your winners quickly and holding your losers, is, I think, the natural human psychology. Like if you've ever read like Trading in the Zone or any real trading psychology books, they tackle this. Which, by the way, I definitely would recommend reading Trading in the Zone. It's a great book, if you haven't already. But that seems like it is what the human brain is almost wired to do, is see that reward, take it really quickly, and then when trades are going against you, believe in yourself, believe in your ideas, believe that it can come back, not want to take the loss. So I think that what you're describing again is normal. How do we counter that? Again, I'm going to go to my go-to answer. We counter that by having good game planning. If you already have a game plan in place when you first enter the trade that says, I'm getting out of this for a loss here, I'm getting out of this for a gain in the following manner, then you need to just be able to make sure to follow it. It's easier to create the game plan that will enable you to cut off your risk early and maximize your reward prior to being in the trade. So you create the game plan prior to being in the trade. You don't try to create it in the moment after you're already in the trade. And that's, I think, step number one. Step number two, which is also really difficult for people, is to actually have the discipline to be able to follow the game plan that you've established for yourself. So that's what you got to do. And then, the final thing I think also is just you have to constantly reinforce how money's made in this business for your own brain. Constantly reinforce it through journaling, through sticky pad notes, through whatever you need to do to constantly reinforce to yourself that the way to make money in trading is to make more money than you lose. And that will only ever happen by being there for the full profitability of your trades when they work out and doing everything you can to have a game plan in place that will cut off your losers when it does not. So I hope that helps. From Brandon in the YouTube, how do you like the Qs down here? I don't like the Qs. Qs broke level 1 support and closed beneath it today. Significantly bigger support is the January low, which is 605. We're about to go into some seasonal bearish period with some very full market dynamics as we get in this month of February. I have zero interest in rushing to buy the dip in the Qs at this point. Show me the Qs at 600 tomorrow, and I would nibble on some long, or even better, what day of the week is it? Tuesday? Show me the Qs in the mid to low 590s on like Thursday this week, and I probably would buy that dip for at least a shorter term trade. Not here, not 615 on a day one down on the first day that we broke support when we're coming into this weaker February period. From Apex Joy, are BE and ASTS good shorts for now? I don't think so. This BE looks great. Just broke out. Beautiful relative strength today. I think that this thing looks fantastic. I don't think that that's a short. It's not extended enough to short either. Extremely relatively strong. And ASTS, maybe this had a push through failure here on this 125. But I would want you to already be short this. You maybe could short the bounce back if at a little higher pricing if you're willing to give it to somewhere between 125 and the high from 2 trading sessions ago as your stop loss. But I would rather you have just already been short this for the initial move, and then maybe you're adding back into the bounce back. But again, maybe you could put a short on like 115, 117 versus the 125 to 130 area on the upside. Hope that helps. From Tate in the VTF, I figured I'd spend some time refining my rules around MOC, so into the close. The futures open, so around MOC, so into the normal market close, the future open, which is 6 p.m., and the 8 p.m. after-hour close. Mainly to help deal with some of the randomness we've been seeing, mostly tightening up how I manage winners that haven't hit price targets yet, and how I handle trades when I'm a bit out of position on the loss side. With how the market dynamics have been shifting lately, some of these rules felt like they needed an update. Once I finished refining them, I thought it might be worth for you to take a look. Yeah, sure, happy to do that. I mean, I can tell you for myself, like, especially, and I'm finally out of the metal trade, which was a great trade, by the way, yesterday through today that I hope some of you guys caught. Beautiful gap up in this thing tomorrow that I sold most of my position in. The thing that was really annoying about the metals trade was it was making me work a lot. Because that was the one that I was really having to log in be at my computer again at 6 p.m. Eastern for the futures to reopen, because silver would be moving all over the place and I would want to just continue to manage my position. And if I wasn't at my computer, it could be a whole bunch of lost P&L. Most of the time, I don't really think that 6 p.m. futures open really matters too much. Even if I have some index longs or shorts on like I do right now, I'm short some TQQQ, it doesn't really have too much of an impact. So outside of like extreme situations with the market, like you go back to April of last year, then sure, or this extreme situation with this commodity trade, I think for the most part, like, we don't have to be worried too much between 4 and 8 p.m. For me, unless I'm trading an earnings name, the space between 4 and 8 p.m. is traditionally a time when I do almost nothing. I'm more active in the pre-market than I am in the after hours. Again, unless I'm trading something that reported earnings, in which case then I might be sitting at my computer till 6, 7, 8 p.m. But that changed just recently with this metals trade where it was constantly moving and I needed to be there for it. Sounds good, Tim. Do you use Sierra charts? I don't even know what Sierra. I've never heard of Sierra chart. I don't know what it is. From Matt on BX. Blackstone getting smoked. Has not been on my radar. I really don't have any feedback for you on it. Not sure what's really been going on in this sell-off here, but this is another one. It's starting to get pretty extreme here to the downside. I have no real opinion for you on this one. I think it's worth watching for a technical bounce back trade, but I'm not sure what the bigger picture thought process behind it should be. Trading View. Yeah, Trading View is great. I don't use it either, but I know it's solid. Super microcomputers. Oh, were they supposed to? SMCI is supposed to report that? I didn't even realize. Like, forgot this company even existed. SMCI ripping higher here as they guide pretty well. All right, so the internet guy is here. So I am going to go because the internet guy is here. And I had a lot of problems with the internet today. Have a great evening, everybody. See you all tomorrow.